Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So normally what I like to do is share with you guys what I'm buying and selling every single week, and I do share that with the community on the Discord. I do share that with the community on the Patreon account, and like I've always said to you guys, I share with all the buys and sells for the family portfolio, as well as of course the this portfolio here. And of course, if you join us at the Patreon account, you get a lot of things, inshallah. And like I've always said to you guys, try it for the first month. If you don't like it, you can leave it. If you like it, stay with us, inshallah. It will be absolutely amazing to have you guys. And of course, as always, like the video, subscribe to the channel. So I've always shared with you guys what I'm doing, but what I'm going to do today is share with you guys here on YouTube all the basically some of the buys I'm making this week. Last week I bought a little bit, but this week I'm going to add a little bit more money to the portfolio. As you can see here right now, we have £462 right now to invest. So far this year, my ISA account, I've basically used about £4,400. I still got £15,500 to invest in before April, inshallah. And my target has always been to basically make sure I max my ISA account, and that's it. That's what I'm going to try to do, and I did it last 4 years, and I'm going to continue doing that, inshallah. And of course, as always, I'm going to share this journey with you guys, and I've always said I will share with you guys, and no matter what happens, whether we're up or down, I will be sharing this portfolio live here on YouTube every single week, inshallah. And I hope you're enjoying this, and I hope you're getting something out of this, and at least to find it a bit more entertainment and to see exactly what I'm doing in terms of buys and sales and so on. This portfolio has not just come alive, just all of a sudden. It's been around for quite some time. Since I started, May of 2020, I basically where I had £1,300, and then a year after, let me actually show you exactly. Okay, so May of 2020 is when I started. Okay, January of 2021. Okay, let me show you there. January of 2021, we had almost £22,000. Is because of course that year I've invested my entire ISA account. That I basically maxed out my ISA account that year. 2022 January, here we go, that we had 43,000, so we doubled that year. Okay, the following year, 2023 January, again 1st of January 2023, 61,000, again another 20,000 added on to the portfolio. And then January of 2024, which is basically this year, this is February, so January of this year was 90,000, but that was about 30,000, and a lot of it was price appreciation, of course, plus the what I've added. And inshallah, we'll see what happens by January 2025. I'm going to continue doing this every single week, and a lot of it is because of course I've added quite a bit of money. Some of it basically, as you can see here, we've got a lot of right now over £13,000 when it comes to total returns, and of course we made over £7,000. Okay, and we've got a lot of dividends as well, about 5,000 something. So all of that, of course, basically it's been reinvested. That's why it says invested 96,000, but I've not invested £96,000. I've invested about 80, whatever it was. So inshallah, I'm going to continue sharing that with you guys, and what I'm going to do now is basically share with you guys two companies I'm adding to the portfolio. I'm basically adding two, they're already in the portfolio, and the first one we're going to talk about today is this company here, Mastercard. Mastercard has been in the portfolio for not long time. Okay, I do own it here, and I do own it in the family portfolio, so I'm kind of doubling up. Now, year to date for this company is, if I can, year to date was about 17%, 16% up. So when comparison to what's happening with the S&P 500, with comparison to what's happening in Nvidia's and so on, or the other technology companies. By the way, this is a tech company. I keep saying this. I don't think some of the brothers, I think they just skip the videos and then don't even hear what I'm saying. And then they write on the comments, oh, how is Mastercard and Visa halal? And I keep mentioning this, the fact that these two companies do not deal with anything to do with the banks, what the banks are doing. These are technology companies that facilitate the transaction itself, and they're not dealing with the riba side of things. Okay, so a year to date about 16% up. 6 months we've got 3% up, and for the 1 month is about 2%. Now This company, when you look at the current PE, you think basically this is too much, okay, 34. But when we look at the last 5 years, on the average for the last 5 years, we're looking about 40. If we look in the base non-gap, if you use gap, it's 41. So it's cheaper than where it has been over the last few years. It's still a little bit too expensive, if basically in terms of PE, but you're never gonna find this Mastercard and Visa trading lower than, I don't know, in the 20s, if you like. Okay, that's almost non-existent. So if we look at the financials, so a couple of things I'm going to look at here. This is Mastercard. So market cap right now is, if I can find it, okay, there we go. So 459 billion market cap. So it's a mega cap company. You can see the dividend is very safe, but it is quite small. Now, in terms of the payout ratio is very, very low, which is nice. And that means they can increase that dividend. And the last one was 16% increase. And then basically the last 5 years, 17%, which is absolutely amazing. And last 10 years, that's 23% per year, which is very fast. And that's what the reason I'm buying this company is because of that dividend, of course, as well as the price appreciation. Now, 12 years of increase in that dividend, you basically get $2.64 for every share of this company that you own. And of course, and if you look at here, the dividend yield, okay, the 5-year average dividend yield, basically this is the dividend theory that tells us basically whether the company is overvalued or undervalued. It says here it looks reasonably valued, and the reason is because the 5-year average is basically higher right now than the current dividend yield. But so the 5-year average is slightly higher, which basically means the company seems overvalued and undervalued at the moment. And when you look at the current PE and the forward PE for the company in the last 5 years is almost identical. So it's trading where it can expect it. Now the financials, normally they have a very, very low PE anyway. So this company is not in the financials, to be fair. So and earnings per share, as you can see here, from 2014 has been growing massively. 2020 was the only year that we had a dip. Other than that, it's been growing every single year, which is quite nice. The free cash flow per share has also been growing, which is absolutely amazing, apart from 2020, again because of COVID. Earnings per share, our shares outstanding, as you can see, has been declining, which is absolutely amazing. So this company, they're buying back their own shares, they're paying you a dividend, and of course they are growing their revenue and everything else. As you can see here, the total sales or the total revenue was $9.44 billion in 2014, and right now $26.4 billion expected in basically the last 12 months, which is absolutely amazing. And this is where this company shines. Return on equity, we're looking at 188%, and return on invested capital of 66%, which is absolutely amazing. Operating margin, we're looking at 58%, and free cash flow margin of 42%, which is absolutely huge. Now, just looking at a few more things, okay, if we look at the total revenue for this company of the average for the last 5 years, the compound annual growth rate for the last 5 years, we're looking at about almost 11%. The net income, the compound annual growth rate, again, we're looking at about 12%, 13%. EPS, again, same thing, about 12%. The free cash flow here is about 13%, and dividend, basically CAGR, we're looking about 14%, which is what we've already seen. Now they've got about $11 billion of free cash flow right now, and for the last 12, basically the 5 years, they grew that about 13%, which is absolutely amazing. So the last thing we're going to do is make some buys. So I am going to buy £300 worth of this company. I'm going to send that to the market. Right now I own 11.2 shares. Okay, and my average is 466. So it's just probably going to go up a little bit because I am up, well, actually almost a flat here, 468. Okay. So now we have 12 shares of this company, and on total invested is 4,483. And I'm going to continue doing this, inshallah, in the next few months and the next few weeks if it stays around this price. Okay. The next company that we're looking at today, I'm going to add to, inshallah, is, oh, by the way, before we move on, just another thing. It's fairly valued at the moment by Morningstar, and as you can see here, the price is 467, currently 494. It's slightly higher than where they expect, and of course the company has a wide economic moat. And the next one we're going to talk about today is Salesforce. Salesforce has, in the last month, okay, it is up about 11%. So you might be thinking, why are you buying this? And I think it's a good question. but I do like the company, and I genuinely think it's still undervalued. This company has got a long way to go. Like I've always said to you guys, I do believe this company will become one day the Microsoft of the future, inshallah, and we'll see what happens. I could be wrong, I could be right. This is another company that I own in the family portfolio and here as well, so I'm kind of doubling up in a way. So right now as we speak, we're up about basically about 10% for this month, and for the last 6 months down about 8%. A year to date only 6% up. So that's one of the reasons I'm attracted to this company. And look at the forward PEs, just to 26 currently as we speak, which is very, very interesting. The market cap is 259 billion market cap right now. They have a dividend, so they started paying dividends right now. To be honest with you, they not, of course, the dividend safety and all of that stuff, they don't have enough to assess that yet. I think they paid only 2 quarters so far. And looking at basically the payout ratio, the annual payout is about $1.60, which is absolutely fine. So there's nothing huge. But a couple of things I want to talk about in terms of this company. When it comes to earnings per share, as you can see, it's growing quite fast. And earnings per free cash flow per share is also has been growing over the last basically since 2015. If you look at that. Now, in terms of shares outstanding, it has increased quite a bit. And a lot of it is because they acquire other businesses, slags and all of this, and sometimes they use that, of course, to finance and so on. And I don't mind that. And right now the company is basically, in the next few years it will become definitely a mature company. So once it becomes mature, then hopefully they will start buying back their own shares. I think they did mention recently they are going to buy back their own shares. And as you can see, that basically this year they are expecting to buy back a bit of their shares, which is quite nice to see. So hopefully this will start to come down in the next few years. And total sales is been growing from $5.3 billion in 2015 to right now $36.5 billion, which is absolutely amazing to see. Return on equity is only 10%, return on invested capital about 10%. So it's really good in terms of operating margins, about 19%, free cash flow about 32%, and when it comes to debt, almost no debt, which is absolutely amazing to see. So I really like the balance sheet for this company. And in terms of valuations right now, we're looking at about 3 stars, which means basically it's fairly valued. $290 per share is where they think the price should be. It has a wide economic mode, and as you can see, the price right now is $279 per share. So it's slightly lower than where they think it should be, hence why I'm actually trying to add to it. If we look at Seeking Alpha, the expectation is 24 strong buys, 14 buys, 11 holds and 1 sell. And overall price is about 10% upside from where we are now in terms of expectations moving forward. And also I'm going to show you guys for Mastercard this side in a second. As you can see, double-digit growth every single year for the next at least 3 years, and when it comes to revenue, almost double-digit every single year moving forward, which is absolutely amazing. So in terms of the revenue side of it, as you can see here, we basically in the last 5 years, the compounded annual growth rate for revenue is basically 20%, net income 42%, EPS 66%, and free cash flow last 10 years is about 28%. Now they do have excellent free cash flow right now of almost to $12 billion, and that is basically compounding out around about 28% over the last 5 years, which is absolutely amazing to see. Right, the only thing that's left is then to, of course, to make some purchase, and I'm just gonna whatever money that's left, so that's £162. That gives me 0.7 shares, so I will send that to the market right now where I own about 11 shares. So we'll see, and as you can see, my average is $232 per share. Okay, and that probably will go up, of course, because of course I'm up about 14%, 235. That's basically it. So yeah, there you have it. That's the 2 companies I wanted to share with you guys. But before I finish this, I want to go over Mastercard very quickly, especially when it comes to things. Okay, the first one is the ratings, just to show you the price. So 23 strong buys, 10 buys and 7 holds. And the final thing I want to in terms of price wise is basically the 5% upside, $522 per share. Earnings expectations, we're looking at, what are we looking at, about 16%, 15%, almost 17%, which is absolutely amazing for every single year for the next 5 years. Double digit basically revenue growth. I love this company. It's really good, solid business, and I don't think they're going to go out of business anytime soon. I know what's happening with Visa, with the US side of things and legal suits and whatever, all of the stuff that's going on right now, but does not bother me at all. These, the US are quite very well known for doing this type of things. Every few years they've got another company they want to have questions about this and that, but nothing comes out of it. And I don't think Visa, what they can call the monopoly or whatever, but I don't think anything will come out of it in terms of investors. And in fact, if Visa comes back down, I'll probably buy more because I really like the business as well. There you have it. That's the two companies I wanted to add to the portfolio. As always, please do your own research. Don't just follow me. What I'm doing here, alhamdulillah, as we speak right now, I think is that money. There we go. That's a zero right now. So inshallah, I will be adding another £250 this week because that was for last week. So inshallah, I will be adding another £250 this week, and then I'll share that with the community. As always, if you haven't joined us in the Patreon account, please do so. If you're enjoying the content, like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.